Hi, and welcome to another episode of Funding Juicy Solutions. I'm Juice Ortiz, and today I'm going to get deeper into credit. So I want to look at credit scores, how they change as you go up or down the numbers, the different types of credit scores, and then also use one example of income amount and look at how different credit scores will affect your monthly mortgage payment. But there's four basic places where your credit is pulled from for different parts. So if you are getting a mortgage, your FICO score is going to range between 300 to 850. If you're going to get an auto loan, the FICO score is going to range from 250 to 900. From a bank, it's going to range from 250 to 900. I'll call it Advantage. And that FICO score ranges from 300 to 850 points. In home loans, we're using the mortgage credit scores. Your range is going to be from 300 to 850. There's several things that impact your credit, but number one, the biggest impact on your credit score is going to be payment history. The number two effect on your credit is going to be utilization. So, for example, at one time in my life, I think I had like $28,000 available to me if you count like a truck loan I had, credit cards, and student loans. And so I had all of this credit available, I think at 28 grand, and I was only using 10,000, which means I only had a balance of $10,000 on there. And so that 10,000 only is like under 30%, or no, a little over 30%. So that was pretty good. The sweet spot is going to be 10%. And if you can be under 10% usage of your total credit, that's going to be awesome for your score. You want to stay under 30 to be good, but by no means work as hard as you can not to go over 50%. I did an episode on that, take a peek right here, but you really want to avoid going over 50%. Now, the third biggest factor in your credit score is going to be the history that you have. So if you have an account open for 10 years, that's going to be better than an account you've opened for only 1 year. I'm going to jump back to payment history in just a minute. But the reason I'm mentioning this is because I've had some people concerned about pulling their credit, and that's going to be down at like number 5 or 6 or whatever on the biggest effects of your credit score. Now, it does impact you. You're going to take about a 2 or 5 point hit. Now, jumping back real quick to talk about payment history, the biggest influence you're going to have on your credit score is payment history of credit cards. So credit cards are great at building credit because they're unsecured. I heard someone mentioning this in my continuing education recently. And if you can handle unsecured credit and you're regularly paying that payment history over a year, never had a payment later than 30 days, you've never had a payment later than 60 days, or you've never had a payment later than 90 days, that'll hurt you a lot. If you never have those late days, we call them 30, 60, 90s. If you've never missed a payment over a long period of time, that's going to improve your credit score because it's going to show lenders that you are worth investing in because you're a reliable borrower. So keep all of these factors in mind when you're trying to understand, like, okay, how does my credit impact a loan? Okay, now let's jump into it. I wrote down some things on one particular example. Let's say you're going to buy a $300,000 house. You're going to put 3% down. So you're going to get a $291,000 loan. I'm going to talk conventional. I'm not talking FHA, not going to talk VA, USDA, non-conforming, any of that stuff. I'm going to talk conventional. And I'm going to talk from a first-time home buyer conventional option of what today is. Today is second week of December, 2022. And I know everyone has concerns about interest rates. Short little pause. Again, please don't let the media influence you. Talk to your mortgage broker. Talk to the realtor. They know what's happening day in and day out. By the time things hit Google or the mainstream media, oftentimes it's either out of date or they're using facts that only support what's going to benefit the mindset that they're trying to instill into America, into the public. So stay in touch with your mortgage broker, stay in touch with your realtor, because as of December, with what has been going on and with the realtors I've been talking to, housing costs you can get, interest rates that I'm seeing we can get, it is a great time to buy. All right, so back to this mortgage example. If you had a 740 credit score, and nothing over 740 is going to give you a better advantage ever. So if you have an 800 score, it's no different than having a 740 score. Keep that in mind. So we're going to go 740. Okay. Today we are able to get a 5.875% interest rate. Mortgage insurance is included. You don't have 20% equity ownership in the loan, but the mortgage insurance with a 740 score is only $111 with this one mortgage company that I have. And we have contact with the #1 mortgage company in the country. With principal and interest, you're going to be at $1,840 a month. 720 credit score, 5.875%. Mortgage insurance is going to be $145, which now bumps you up to $1,866 a month. I go 700 credit score, 5.875%. Mortgage insurance is $172 a month. And as you can see, the mortgage insurance is starting to go up because you're hitting 740 down to 720. Now we're down to 700. The monthly mortgage payment, principal and interest, including insurance, mortgage insurance, is $1,893 a month. All right, let's bump down to a 680 credit score. We can still get a 5.87%. The mortgage insurance is going to be $215, and the total principal and interest with the mortgage insurance is $1,937 a month. All right, now same loan, 660 credit score, 5.875%. The MI is now at $295 a month because the credit score, and we're finally at $2,024 a month. So if you keep in this particular situation on this day with a whole bunch of other parameters that are in the pricing engine I've put in with UWM, if you're above 680, you can get a $300,000 house, 3% down, under $2,000 a month, even with MI in there. It's not till you get to 660 when you're at 2024 or you're over $2,000 a month. I did also go over and I put in a 600 credit score. I put in the same information that I did before for 600, and there wasn't even an option that came up. When you're talking about credit scores and you're trying to discern if it's worth an application, pulling credit, and if you have an idea where you know where your credit is, 2 or 5 points might not impact you that much. If you're at 799, which I've been before in the past, I could probably pull 5 loan applications. But if you're at 699, then it might be something to consider. I hope this helps when you're looking at considering buying a home. We have a lot of new first-time home buyer opportunities and some low-income assistance programs that can help you get into a home if you haven't been able to own one yet. But remember, buying a home is an investment into your future. It is a big chunk, and we got plenty of juicy solutions waiting for you to help you out. So give me a call or take a peek around the website for some more helpful tips, and take a peek at a few of the blog episodes I noted down below.